Imagine the world's #1 AI chipmaker placing a massive bet on its rival. That's exactly what just happened. Nvidia has officially completed a $5 billion purchase of Intel stock, marking a major shift in the semiconductor landscape. In this video, we'll break down why this is happening, what it means for both companies, and how it could reshape computing forever. Stay tuned. On December 26, 2025, Nvidia finalized a long-anticipated deal, buying approximately 214.7 million shares of Intel at about $23.28 per share, making it about a 4% shareholder in the storied chipmaker Intel. This move wasn't just a rumor anymore. Regulators cleared it, and the shares are now on Nvidia's balance sheet. That's $5 billion in cold hard cash flowing to Intel, and a rare vote of confidence from one of the biggest names in tech. But this isn't your typical Wall Street trade. This is strategy. Now, you might be wondering, why would Nvidia invest in Intel? Aren't they competitors? Here's the logic. 1. CPUs still matter. Intel leads in x86 CPU architecture, the backbone of most laptops, desktops, and servers. Nvidia's GPUs are powerful, but they need CPUs to drive them. This investment helps Nvidia secure deeper access to x86 platforms that corporate customers still demand. 2. Integrated products. The two companies have talked about co-developing future data center and PC chips, where Intel's CPUs and Nvidia's AI GPUs work together more seamlessly. 3. Strategic supply chain play. Nvidia historically relied on third-party CPU partners in fabrication. This buy strengthens its supply chain diversification, especially in strategic markets. So it's not just money, it's positioning. But there's more. For Intel, this is huge. Over the past years, the company faced slowing growth, manufacturing struggles, and intense competition. This $5 billion buy means fresh capital straight into Intel's balance sheet at a moment when it desperately needed support. Plus, Intel stock spiked after this deal became official, showing that the market sees this as more than just a transaction. It's a vote of confidence. So Intel gets money and credibility. But the big question is this: will this money turn into actual competitive products that can challenge AMD and others? That's still to be seen. And we'll get into that next. This isn't just about two companies. This could be a major turning point for the entire semiconductor industry. Here's why. It signals collaboration between companies that usually compete. It could lead to tighter integration between CPUs and AI accelerators, which is a huge deal for data centers and AI workloads. It may also influence future government policy and investment, especially in the US, where semiconductors are a strategic priority. But it's not without questions. Will this collaboration produce real hardware wins? Will Intel's manufacturing, long a challenge, catch up to global rivals? And how will AMD, TSMC, and others respond? These are the big unknowns as we step into 2026. Investors are watching this closely. Intel's stock climbed after the news, while Nvidia's stock took a modest dip, largely because Nvidia used its own cash for the investment. Analysts see this as a calculated risk. Some argue Nvidia's ecosystem becomes stronger with Intel x86 support. Others say the investment doesn't fix Intel's manufacturing problems. Many agree it reshapes expectations for partnerships in the chip world. This story isn't ending yet, it's just beginning. So there you have it. Nvidia's $5 billion buy of Intel shares isn't just finance news, it's strategy, industry politics, and possibly the next big shift in AI computing. What do you think? Will this partnership produce revolutionary chips? Or is this just another big bet with big risks? Drop your thoughts in the comments below. I read every one. And if you want more deep dives like this, news breakdowns, market insights, and future tech predictions, make sure you smash that subscribe button and hit the bell so you never miss an update.